Hatton Garden, the centre of London's diamond and precious metal trade. And the high-end jewellers in this area of the capital will have been celebrating this week as gold has hit a record price of $1,778 an ounce as investors across the globe buy up supplies. But why has this happened?
Basically, gold is seen as a store of value, and a safe haven. So when markets sort of retreat and there's a bit of fear in the economic recovery, which we've seen in the last couple of weeks, investors move out of high-risk assets into what they consider safe havens, and gold is the main safe haven at the moment.
So this is pretty much just a knee-jerk reaction, really.
I think people consider it a bit of an overreaction, and most of the falls have probably been overdone. And that's partly because August tends to be a bit of a quieter month, and also the risk, the fear has come on quite quickly as well.
And this risk and fear has in turn come out of the US and European debt crisis and the threat they pose to the global economy. But this recent price hike in the precious metal isn't just good news for investors, as more and more companies are now keen to get their hands on your scrap gold. And it's not just shops like these in Hatton Garden that will now pay cold hard cash for your old jewellery. A whole industry has sprung up online, giving consumers the opportunity to send their gold away for a quotation and make the whole sale via post. This can be a quick and easy way to get some extra cash, but it can still go wrong. Earlier this year, the Office for Fair Trading raised serious concerns about the industry and enforced a number of changes as a result. Cash for gold companies will now have to provide consumers with the option of either receiving a quotation for their gold, which requires a positive acceptance, or just receiving a payment. The risks of both of these options must also be displayed clearly. Consumers must also receive full information regarding the assessment of their gold, including carats and weight data. And when referring to a top price, it must be made clear that this is based on the gold's scrap value. Gareth Shaw is a senior researcher at the consumer group Which Money, who has worked on investigations into the cash for gold industry. So what should consumers really be wary of when trying to sell their gold?
The thing they've got to remember is that a cash for gold firm only wants the gold. It doesn't take into consideration how the jewellery looks. So when you're selling it over, all they're going to evaluate is how much gold is actually in your jewellery and the quality or purity of that gold. So if you've got a really nice looking piece of jewellery that you want to sell, the cash for gold websites and the cash for gold companies aren't going to take that into consideration at all. When we investigated the companies, we bought a necklace for £399. When we tried to sell it to a cash for gold company, we actually were only offered £22. So there's a significant difference between what you pay for jewellery and actually what you might be offered for it.
So how can consumers make sure they get the best price when they're selling their gold?
Much like any other financial service, it's important to shop around. Make sure you go to jewellers, get your jewellery valued, weighed, have a look at the hallmarks, and go to many jewellers to do this a number of times, get a number of quotes. It may be a little more hassle than actually sending it off to a cash for gold website, which is quite a sort of fluid transaction, but actually you might be better off by taking that extra effort and going that extra length.
This price hike could be an unexpected perk for some consumers, especially in the current financial climate. But of course, if you do decide that you want to sell off any precious jewellery, you should always think long and hard before you do it. And if you do decide to go through with the sale, you should always shop around and stay vigilant to make sure you get the best price and are not left out of pocket.